The year 2022 has already seen its fair share of surprises, from record high gas and food prices to the recent invasion of Ukraine by Russia. Now 2022 is gearing up for another major shock. According to billionaire hedge fund manager Bill Ackman, there's an economic storm coming and it's already too late to go back. Stick around till the end of the video so you can learn what Bill Ackman thinks is the best way to survive this economic storm. Hello and welcome to the channel, and today's video we'll be looking at a recent interview with Bill Ackman where he shared tips on surviving the coming recession. But first, make sure to hit the like and subscribe button so you never miss out on any of our latest videos. So where were we? Yeah, Bill Ackman's tips on how to survive the 2022 recession. First things first, a little back note on Bill Ackman. Bill Ackman is a 55-year-old billionaire investor and hedge fund manager. He's also the CEO of Pershing Square Capital Management. For those of you who don't know, Ackman made the headlines in 2020 when he made about $2.4 billion from a $28 million bet that the COVID pandemic was going to crash the stock market. That's about 70% return on investment. This followed a 58% return on investment Pershing Square had made the previous year. Now, with solid returns like that, you'd want to listen to Bill Ackman if he talks about a coming market crash, just the way he did in the year 2020. Now he's in the news again. This time he's betting that the American economy is heading for a recession in 2022. Now, before we get into details of how to protect your assets in this coming recession, let's take a moment to understand what's going on in the global markets right now, and why many investors think this is the year we will see another recession. It all started with the 2020 COVID pandemic. As many of you know, in a desperate bid to save the people from what was a new virus at the time, many governments all over the world ordered lockdowns and travel restrictions. Of course, this helped limit the spread of the virus, but it also had another effect, one that is very devastating, especially when you look back on it from the year 2020. You see, all those lockdowns and travel restrictions also affected the global supply chains. As a result, many businesses and economies were left reeling from the effects of the pandemic. To save the American economy, the Federal Reserve, led by Jerome Powell, printed about $3.5 trillion, which it used to buy government securities. This drove down interest rates and kept the cash flow coming in for companies who needed it the most. It also drove down the cost of lending for many businesses. While the intention behind pumping new money in the economy was very harmless, the action wasn't without risks, especially for the economy. A Texan congressman, Ron Paul, warned the government that going ahead with such a plan would have major consequences for the economy. One of his warnings was that too much easy money would create overheated financial bubbles, many of which could burst and have a severe emotional impact on people. Creating such an abundant supply of money would lead to inflation, although by the time inflation became a serious issue, it was already too late. Given the Fed's mandate of maximizing employment opportunities and stabilizing the commodity prices, it had to keep an eye out so it didn't jeopardize the economy in the long run while trying to save it from the COVID pandemic. But the Fed forgot about those mandates in the heat of the COVID pandemic, and it wasn't their fault. The whole world was in a crisis and everybody was looking on how to soften the blow for everybody else. Sadly, this was not to come without serious consequences for both the US economy and the global economy as a whole. Fast forward to 2022, a lot of the problems caused by the pandemic still remain. Global supply chains of essential commodities have remained disrupted and unable to return to pre-pandemic levels. This is because last year's unusually cold winter further destabilized global supply chains. As expected, this shot up the price of fuel, so much so that many believed that by January, the cost of fuel would be so high that it would reduce the demand for it. The fuel price hike led to other disruptions in the global supply chain. Another area that was majorly affected was the food industry. High gas prices mean that the cost of transporting any goods around the world has risen too. Food prices as well as housing prices have also risen exponentially. By January, inflation was at its highest in 4 decades. Things were already bad enough with the high food and gas prices, but they got worse as Russia invaded Ukraine toward the end of February. Many Western nations in solidarity with Ukraine slapped Russian people, their government, and their economy with what experts like to call crushing economic sanctions. This move isolated both the economy of Russia and the Russian government. As a result, Europe's biggest oil and gas producer, Russia, had become an isolated economy. Many companies and brands have paused operations in the country of fear of being hit with the sanction themselves. As a result, the Russian government has been on the brink of loan default. Its currency has also dropped to less than $1, while its stock exchange had been closed for most of March. Furthermore, the US and other European allies were being pressured by their respective governments to stop oil trade with Russia. The US was first to bow to this public pressure. On the 9th of March, President Joe Biden announced that the US would no longer import gas from Russia. Other European countries have also made commitments among themselves to reduce the continent's dependence on Russian gas and oil. This means more bad news for gas prices. This is why many investors predict that the American economy will go into recession soon. With a 40-year high inflation record, many are looking for a way to protect their money in this time of financial uncertainty. And for that, we turn to Bill Ackman and his recession-proof investment strategy. One thing Bill is famous for is finding great businesses at bargain prices. Of course, this means that he makes a few investments every year, but he makes sure they are totally worth it. He calls it simple, predictable, free cash flow generative, super durable growth companies. These are businesses that have a wide range of sustainable competitive advantages. They are not capital intensive and they earn high returns on capital. These kinds of businesses are more resistant to market movements like interest rates and price of commodities. Now, Bill admits that other investors are after these kinds of businesses too, so it's hard to find them at an attractive price. Here is where Bill let us in on a secret. He says the key to buying such lucrative businesses at fair prices is to watch for periods when such companies are having difficulties. For example, the management makes costly mistakes, or for some reason the investors wrongly estimate the value of the business. According to Bill, this is the right time to buy. Speaking of rough times, there is already sky-high inflation and some interest rate hikes around the corner. Many businesses are about to have that tough time. Many fear that too many rate hikes could crash the stock market. If you follow Bill's advice, that might not be such a bad thing. You see, usually in a stock market, lots of investors are overwhelmed by fear, and so they begin to sell their holdings in many companies so that they can cut their losses. Many investors will even sell their shares in great companies for less than their actual value. For intelligent investors like Bill Ackman, this is a great time to buy lucrative businesses at attractive prices. One thing you have to understand is that market booms and market crashes are all part of the economic cycle, and they are bound to happen every once in a while. However, by picking the right strategy, you can be one of those investors who get to make money no matter how the market is doing. Whether the market goes up or down is all good news for your investment portfolio. For a better example, Bill points to his investment portfolio, which usually contains about 10 investments, with the top 3 making 50% of the entire portfolio. He says by looking at factors like business quality, durability, risk management, and balance sheet strength, he can find great companies with a good business model and great leadership at the top. A great example of such a business is a pizza store. The pizza business is relatively immune to interest rate hikes and commodity prices because it's one of those businesses that have become a part of human life. And so even with the price increase, many people will still buy pizza or their favorite cup of espresso. And those are the kinds of businesses you want to invest in when a recession comes, because you can find such companies at meager prices. And that's all for today, guys. I hope you enjoyed the video. Before we go, head over to the comment section and tell us what you liked most about Bill Ackman's strategy for surviving a recession.